We move to the British pound US dollar pair. Here we can see that the dynamics of the pair is the triangle. Yes, we have this resistance line, which has several times stopped attempts of the bulls to retrace higher after the big decline which happened after Brexit vote. And this consolidation is expected to continue for the British pound. All in all, last week we saw that data from the United Kingdom is not as bad as some analysts and experts have feared. It seems that Brexit didn't hit the UK economy as much as feared. And all in all, British pound, despite the weight of the general downtrend, despite the weight of Brexit uncertainty, has some support. Here at this chart, I have the pivot points multi-frame indicator applied. We can see it as the resistance and support levels. This is the weekly indicator, and I find it very useful. You can see that the pair is trading below the weekly level of, let me see it. The weekly pivot level is at 1.3147. We are below this level and at the bearish territory. The first weekly support is located at 1.3018. 1.30 is a key level for British pound US dollar, and I expect that there is potential for the British pound to get to this level, but this may be a rather strong support, and it may actually limit the decline. The next support is at 1.29, the weekly support, and also the support area of this 2-month triangle. So this is the next stop in case British data keeps disappointing this week. We have the release of British PMIs, and actually there are reasons to believe that this data will disappoint. Manufacturing PMI was weak in July and is likely to come below the 50-point mark, which marks the industry contraction, also for August as well. So if this British data come negative, and if US non-farm payrolls come rather good, then we'll get probably a chance to test levels below 1.30, but at 1.29 I would certainly close my bearish position for the British pound, because I believe that the pair doesn't have momentum to get lower. This is the support of the triangle. Also, we can see that the daily MACD indicator is rising, so it doesn't correspond to the strong move to the downside in British pound. So 1.29 is my big stop for short trades in British pound. One look at the 4-hour chart. Here we can see that the pair lacks momentum in the short term. We are trading around 1.31 level. On the 4-hour chart, the moving averages are horizontal, so it favors sideways trading somewhere between 1.3180 and 1.30. We have spoken already about 1.30 mark, that this is significant support, and resistance at 1.31, 1.32 is the resistance area. Here we have the temporary top, which was formed last week. So the pair has to overcome this level to get a chance to test higher levels around 1.33. I think that the British pound this week doesn't have bullish drivers of its own. And if any increase happens, it will be because the US data disappointed and, well, didn't live up to the market's expectations. So look for increase to 1.3180 to build new short positions, but be careful with your sell targets. Mind 1.30 level and as I have already told, 1.29 level for the big moves in this currency pair. Of course, traders think that many analysts and traders actually think that the Bank of England may continue reducing interest rates at the upcoming meetings. For now, I think this is not a big driver of the forex market. We don't see any commands from the Bank of England which would move the market. So I don't think that this week will be important. Here, all we have is US non-farm payrolls, and regrettably, the volatility will may be low ahead of this event in pound dollar. So probably this is not my favorite pair to trade this week.